Good morning and welcome, everyone. Thanks for joining the Blueprint team. My name is Matt Meyer, and this is an educational event for our Comprehensive Advisor series. As some of you may know, many of the topics that we discuss on the Comprehensive Advisor series is often derived from direct feedback from the advisors we work with and real-life scenarios. So recently, I've been asked by several advisors, how do you work with business owner clients, and what can we do as advisors to bridge the gap from working with business owner clients on their personal planning to working with business owner clients on their business planning? So for the purpose of this presentation, I'm not going to discuss specific solutions like cash balance plans or key man insurance, but focus on the process itself and how we can engage the business owner by asking the right questions, gathering the right information, and taking action. As I value your time today, I'm going to keep this presentation to less than 20 minutes with time for questions and answers afterwards. So with that said, I'm excited to present Engaging Business Owners. We have heard that bridging the gap with business owners may sometimes feel uncomfortable, or you may not know where to start the conversation or what questions to ask. It may feel easier to work with them on their personal planning, but I promise you, if you bridge the gap into their business, you will not only find more opportunity, but you will create value that sets you apart from the competition. For the advisors that are on the call that are familiar with working with business owners, we're also going to discuss some of the tools and processes we have put in place to help you. So the purpose of the presentation is to provide you with the foundation and resources to engage the business owner. We're not asking you to understand every facet of business planning, but to know that you have a team that can support you when the opportunity arises and that you have a process in place to deliver value. So engaging business owners all starts with a conversation, asking the right questions and knowing why you're asking them. Then taking what you have learned and moving the business owner down a path of discovery to action. So I will address three main areas that we can start conversation: business valuations or business value, succession planning, and discovery to action. What does that process look like? So business value, what to ask and why to ask it. Did you know that 62% of business owners have never had their business valued? I imagine there are several owners on this call that have never had their business valued as well. We might have an idea or some ballpark figures, but to actually use a third party is uncommon. So this is the foundation on many levels of business planning and also personal planning. As with many business owners, the value of their business may be their largest asset they own. There may be complex tax and estate issues as well, but we know one thing, that their business is very important to them. So not only does this emphasize the importance of engaging the business owner needs, but it is also a key element in their own retirement and estate planning. I also know, based on experience, that many business owners don't have a professional that is guiding them through this process day to day. It's a very underserved marketplace from a planning perspective. In fact, I would imagine people on this call that are business owners haven't received a call from a business advisor asking them if they've addressed their specific business planning needs. I know personally that I have not. So what do we ask? It's especially important in this new tax environment to understand what type of business that we're working with. Is it an S Corp, a C Corp, an LLC, or partnership? This can help us better understand where we may be able to help with specific business planning and how we may be able to help engage or partner with the business owner's other professional partners like CPAs and attorneys. In addition, once we understand this, we will also know more about the business owner, his partners, the percentage they own, do they have key employees, and a lot more. There are other elements that are important here as well. Is the business growing? Do they see certain variables in the business that may change in the future? And do they see the value being the same in the future? These are all critical to understanding the value of the business and obviously how we manage that going forward. So we need to address if they have had the business valuation, and if so, how was it derived and when was it derived? So what is the purpose of asking these questions? Understanding the business and what type of business is imperative to moving the business owner to action. This is the foundation for buy-sell agreements, cross-purchase agreements, executive compensation plans, and key man insurance, and a critical element that we'll discuss later, succession planning. I also think understanding or asking these questions that we can get into the business owner's mindset. The recent reduction in corporate tax rates means business planning, a business owner could retain more capital for a variety of planning opportunities. Does the business owner know that? In addition, if you have a business owner that is a pass-through income S corporation or partnership, it may be dependent on their deductions on the wages that they pay employees. So a higher wage may mean bigger deductions and open up other planning opportunities for you as an advisor. So now we can see how important it is that we ask the right questions and start the conversation with the business owner, especially in a new tax environment. One example is I've recently received a call from an advisor who met with a business owner client of his, and he was meeting with this business owner client to discuss his personal planning needs. However, this particular client had recently partnered with his father in the family business. And in this situation, the father was also remarried and nearing retirement, but had not put together their succession plan. They had valued the business prior to the son entering the business and prior to the father being remarried, but nothing since that time. So in order for the son and his advisor to actually start the conversation and establish a business valuation, that they could understand what type of succession plan is needed. This is really the first step and most important element to get everyone on the same page and agree on a value. If the father in this situation overvalues the business, it puts a lot of pressure on the son and potentially the business relationship. So in this particular situation, we started with an informal business valuation, which I'll also talk about a little bit later, but it was at least starting the conversation and seeing if there was a point that there could be an agreeable business valuation. Ultimately, this led to another discussion regarding the succession plan and how the son was going to take over. But as you can imagine, it's difficult to take that action if the parties can't agree on a starting point. And that leads me to the succession planning. It's often overlooked, and it's an important and key element in the aspect of business planning. It can help ensure an orderly transition of the business, and for the business owner, it's important to note that the conclusion of the time with the company is just as important as the beginning. And I'll reiterate that. The conclusion is just as important as the beginning. So investing the time to think through the important considerations before starting the succession process can pave the way for a smooth business transition. So let's address some of the triggers for succession planning in real life examples. These are not going to be every variable that we see, but these are kind of the main ones that we see day to day. Death. This certainly can accelerate a succession plan of a business. I've recently worked with a business where the principal deceased. There was a buy-sell agreement in place, but it didn't address specific spousal transition rules in the succession plan. And for most business partners, they don't want to be in business with a spouse of a deceased partner. But if it's not outlined specifically in the agreement, the shares may go to the spouse, and ultimately, you have a new business partner without a clear and distinct plan. This is also very common in family businesses where there might be multiple siblings, and they might have different opinions on how the business should be run, or even if they should keep the business. So obviously, this can be detrimental to a business, but addressed, it can make for a smoother business transition. The second trigger is disability. Often overlooked, but if it happens to a business, and a business owner is out for an extended period of time, it can also be detrimental. And if it's not addressed, it can be something that can deter the succession plan. Another example is I was working with a CPA firm that had two partners. One of the partners became disabled for an extended period of time. They had nothing in place to address this specific event. and the remaining partner was basically left to handle all the clients and run the business. This obviously put a lot of pressure on the business itself, and ultimately, during this particular transition, they ended up losing clients because the clients weren't being met with the type of service that they were used to. The last trigger event that we'll talk about, which is a little bit easier at times, but there are other variables that are unforeseen, which is retirement. One of the main issues that we've seen is the psychology of a business owner actually leaving his business. He doesn't necessarily always want to lose control. He always may want to have a say in the business. Again, this often arises in a family-owned business where the founder of the business may want to continue to have influence on the business, but the succession plan doesn't really account for that. So having a clear and distinct succession plan eliminates or can greatly reduce some of the gray areas of business succession. But in each of these situations, the owner must be intentional about their goals and vision for themselves in the business. Along with being intentional, the owner must be willing to take the appropriate actions and make appropriate investments to grow the business and develop a succession plan. The successful succession of a business which maintains the value of the business and provides for the heirs of owner requires a combination of intentional management and planning that involves various legal tools and documents that reinforce the plans. So in this situation, what do we ask? Some of this may seem very simple, but it's certainly important to engaging the business owner and again, moving them to action and understanding where they are. Do they have a plan in place? Is it comprehensive and does it address the many variables of what can happen? And if they do, when was the last time that it was actually updated or reviewed? And have there been significant changes since that time? So these are the questions that we want to ask. So why take the time to have these conversations? Because we know proper business planning can impact your clients, their employees, their retirement, and their family dynamics. Our goal at the Blueprint is to provide the resources to become a comprehensive advisor and help you engage clients differently. And we certainly think by asking these type of questions, you will differentiate yourself as an advisor. Now that we've addressed why it's important and what to ask, the last key element is what does the process look like? We have established processes and tools to help you engage the business owner. The process to discovery to action can be easier than you think. It makes bridging the gap smooth and helps you show value along the way. So the first step in the process is to review and complete discovery forms. At the Blueprint, we've created a discovery document or a business intake form that addresses the questions we discussed earlier. What type of business, what ownership percentages, what they may perceive their business value to be. In addition, it discusses business protection, it discusses recruiting, rewarding, and retaining top talent, and also, most importantly, it discusses the plan for an efficient transfer of the business succession planning. So with this intake form, we can address the many variables that every business owner client is thinking about that may or may not have been addressed. The second step in the process is to value the business, as I discussed earlier. If the parties aren't agreeable on the value of the business, you're not going to make much headway with the business owner. So we utilize a service that represents the fair market value of companies. It at least starts the conversation. In addition, we have access to insurance carriers that provide this for free for our clients. These are informal business valuations. However, as we know it's critical in this process to start the conversation, it's a great place to start and to move the business owner to action. The third step in the process, again, is identifying the triggering events and who it may impact. At this point in the process, we also may be working with other professionals of the business owner, their attorneys or their CPAs. But we need to determine and help work with the business owner to structure the proper succession plan, or business plan. The fourth step in the process is to formalize the agreement in writing with the help of an experienced attorney in the business planning process. Again, you'll probably be working with the attorney along this process, but you can quarterback this by gathering the right information, understanding the mindset of the business owner, and engaging him differently. The last step in the process is to actually fund and execute the agreement. We determine the best solution to fund the liability events. This is where you can become more involved in the planning process. Now you're there to solve the needs of the business owner. Again, you become the quarterback, and now you're implementing the actual plans that help them with their succession and their business planning. So part of what we do with our business partners is to add value. We know that providing insurance solutions is only one part of the business and doesn't necessarily differentiate us or add a lot of value. But if we bring insight and wisdom and we're demonstrating high value in the process, we can differentiate ourselves. So this is what you can do for your business owner clients as well. We're addressing very specific needs. We're delivering knowledge, insight, and wisdom. We are having deep and meaningful conversations. And this is where it is. As a business owner continues to evolve, especially, it's important to continue to add more value to your clients. We become more comprehensive. So our objective is to assist you in moving these discussions and becoming that resource for the business owner client. So where do we go from here? If you're a business owner and you're on this call, do you have a written succession plan? Do you have a written plan in place for disability, retirement, and death or divorce? Have you gone through this process yourself? If you have or you haven't, understanding the process can help you feel more comfortable asking these questions of your business owner clients. And as you can tell from this presentation, we discuss real-life examples and what we are seeing on a day-to-day basis. So this is a story that you can continue to tell and engage your business owner clients in a different way. It doesn't mean that you have to be an expert. It just means that you have to start the process and get the business owner to take action. So I want to thank everyone. I know I kept this under 20 minutes. We want to hopefully find this information to be valuable. I'm going to open it up for any questions that you might have, but there's a lot left, and we hope that we can engage you differently and help you start engaging your own business owner clients.
Thanks, Matt. If there's any questions, please raise your hand and I will unmute you, or you can write in your questions in the questions box. Okay, we have one question for you, Matt. Can you elaborate more on the business valuation tools, and can you elaborate a little bit more on the process of those tools?
Yeah, so with several carrier insurance companies that we work with, obviously their objective is to help sell insurance products. But one of the nice things about working with large insurance companies especially is that they do have a lot of tools. And for the advisors that we work with, we're not always familiar with the ability for these insurance companies to provide us these tools. So the insurance carriers have developed a process that we can gather information on a business owner. It requires tax returns and really a one-page document that lets them know a little bit more about the business. But they provide a very detailed analysis of the business based on the industry, how long it's been in business, obviously the revenue numbers and the tax return information to provide a comprehensive, informal business valuation. We found it successful because, one, it gives this business valuation, but it also shows some of the liabilities that a business owner may have with regards to, retaining key employees, funding their own retirement, funding the succession plan itself. So if you haven't seen a sample of the business valuation tool, we'll send it out to everyone that's on the call. But it is a great place, free of charge, to start the conversation. It adds a lot about value to the business owner. We haven't had a lot of business owners say that they don't want to do it, especially because it's free. But being comprehensive and having this discussion to move these conversations along, this is a great tool, and it's a great advantage to you as an advisor to use it. And currently, none of the insurance companies are charging for it. They claim that it's a $3,000 to $5,000 investment per client on their end. So we want to use it as much as possible to engage the business owner.
Fantastic. We have another question. What are some of the larger issues you have seen when it comes to approaching business owners?
So I think typically what we've seen is that a business owner is in their business. They're not necessarily in the business of putting together their own plans. So even as advisors, when we don't feel comfortable talking about something, we have to understand that a business owner has that same mindset. And the psychology of the business owner is that, as I mentioned, they're fully focused on maintaining and operating their business, growing their business, but not necessarily addressing all the planning needs. So the obstacles that we've seen are getting the business owners to take action, letting them know that it's just important to plan for some of these trigger events, to plan for succession planning as it is to maintain and run their business every day. We have people on this call that have probably experienced one of these trigger events and how detrimental it can be to a business. But I think if a business owner really understands that their business can be at risk for not doing this planning, then we have better effect on them taking action. But it's certainly, I think, really that they don't feel comfortable and they're used to being in control. A business owner has this mindset that they control everything. This is an area that they do need people and they need trusted resources. And you have to get into the psychology of the business owner in order to kind of break that down a little bit for them. And also, and a lot of what we do at the Blueprint is we try to change the narrative of how we engage and talk about all the client solutions that we work with. So with the business owner, we need to learn to speak in their language. We don't need to overcomplicate the situation. And I think, based on this presentation, we're not asking the business owner to solve all these problems immediately. We're asking them to go through a process that we can start to identify and then provide the appropriate solutions that they understand.
Fantastic. If you have any other questions, if anybody else would like to ask a question, please raise your hand or write them in the question box.
So I think that's it.
That's it.
Well, I thank everyone for attending the call today. And again, our objective is to help you navigate this process. So we're going to reach out to everyone on the call. We'd like to identify business owner clients. We'd like to identify if you've gone through this process yourself and help you walk through this. We think that there's a great opportunity here and look forward to working with you more. Thanks, everyone.